Hello again, this is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is 11/11 of 2020. It's Veterans Day, so our hearts, thoughts, prayers for those past, present, and future serve our great nation, both men and women, in every capacity and form of the military and our veterans. We thank you and we're truly grateful for all that you do. That's the most important message I want to get across today. But let's go through our daily updates. Thanks for watching. My first topic right out of the gate is spending matters. You know, when we evaluate from a portfolio management standpoint, the equity valuations, the price to earnings, the PE ratios to see if the market's overvalued, undervalued, or even fair market valued, one of the contributing factors that we look at here with our investment committee at Blanke Schein Wealth Management is spending, specifically consumer spending, governmental spending, and corporate spending, right? And if we look at the U.S. economy, spending matters. Of course, if you recall, 2/3 of our economy is the U.S. consumer. So that is a huge indicator as to forecasting future sort of fair market value or undervalue, overvalue as it relates to markets. Well, let's take a look at this right now. So there's three shapes that you could simply categorize spending very specifically, and sort of the buckets that you could sort of quantify that, right? I put that right here on the board for us as spending, credit, and income. So there's the three shapes that you'll find work its way into the U.S. economy to continue to keep our economy stabilized in the short term, but more importantly, growing as we grow out of this sort of shelter in place, everyone sort of stop what they're doing, COVID sort of early on this year. Now, we know one thing we've learned is that even though we have a second round of sort of looks like rises of the COVID cases around the United States, but also around the world, right? You can't stop the virus. You can only try and do your best to mitigate and contain. But more importantly, we have now vaccines that are now being announced. We saw the last 48 hours of our news cycle, vaccines, as well as therapeutics, right? The President of the United States actually had a therapeutic that helped him check out of the hospital sooner than later. And it really was a positive sign to actually see that, there are some things to help combat where we are, and it's a lightning speed to see the research and development, not only here in the United States, but around the world. And don't forget, Russia just announced that they have a vaccine that's not 90% like we announced earlier, I think yesterday, day before, here in the United States. One of the pharmaceutical companies said it's a 90% efficacy. Russia just said they had a 92% efficacy in terms of this virus, vaccine that they have. Now, obviously, it's going to be a race to see who does it first, and obviously, it's going to be a race to see how it's implemented and sort of the capacity. What we do know is, so that's going to take time will tell. What we do know is that we have so many shots on goal, as early was pointed out, and we've got everyone hyper-focused on this, that I would not bet against our medical research, science and technology teams that are working on this, both here and abroad. I think the market sees that, right? Let's go to look at the consumption side of the equation. If our U.S. economy, as measured by the U.S. GDP, is $19 trillion going into this year on an annual basis, and we take a time out, we also have government CARES Act that added stimulus, both the consumer as well as small businesses, which still need it, by the way. And we could still see another CARES Act pass post sort of 2020 once we get 2021 Congress back in session. We do see that playing out. And as COVID cases rise, there's more evidence to show that small businesses will need additional support. Well, that spending will work its way back into the U.S. economy. And that actually is going to be tremendous, because if you look at where we are right now, year over year, as we look at M2 money supply, or just the banking deposits, right? It's up 18% year over year, highest it's been in pretty much all time in the U.S. economy. So the money is piling up in banks across the United States. That's a 5 times, if you take all the developed markets here and around the world and look at all the bank deposits, because that's real time evidence that we can get. That equates to 5 times greater than it's always ever been, historically speaking. So not only the U.S. solid, but around the world, there's also room for growth, because there is, the way spending takes shape, there's 3 different buckets, right? So you actually have spending or savings rate significantly higher. And as you and I both know, once it's all clear, whether it's relating to travel or restaurants, so there's just going to be pent-up demand in the U.S. economy. Well, that's great, but do you have the money in the bank to support that? The answer is yes. So that's the first box we would check there. Credit, Well, we know that the government here in the U.S., by way of the Federal Reserve, as well as government spending, has not decreased, it's increased. And we also know the Federal Reserve has ultimately doubled down and said that their mandate is dual mandate, invite inflation and support the economy by way of full employment. And that's going to take some years. So the Fed is fully in check. They're fully held to credit. And the government spending is going to continue, especially when we get government back in session. They're going to not spend a little. It depends upon, right, the Biden administration. They have a net spending deficit going forward. So they're going to be adding more money to the U.S. economy, and that's going to add to corporate balance sheets. So we'll find sort of another reason why earnings will continue to get stronger going forward. So there's another catalyst to the growth strategy going forward. And incomes, surprisingly not for all of us, is that incomes have not only stabilized, but they've actually gone up in some cases. Even though we've had some sectors of the hospitality, the travel industry, the airlines, there are, yes, very specific cases where there's a lot of layoffs. And those layoffs will take time to work their way back into the U.S. economy. Unfortunately, that's the case that we're going through right now. But it doesn't mean that markets don't grow higher, or economies don't grow and markets don't go higher as a result. There are three cases to look at that spending matters. Here's the empirical evidence that we see. And I didn't point this out, but credit, what does it actually mean? It means that there's actually 2 points to our GDP, which is trillions of dollars net positive in terms of government spending on the credit side as well as the lending side and the Federal Reserve backdrop. That's just tremendous, right? So we know that we're not going to shut down the economy again. There will be mask and social distancing, and some stores will be able to survive and some won't, right? So support your local restaurants, because those are the mom and pop shops that we all need to get out there and support one way or another. Now, we also know that even though through this new world that spending does matter, but it also changes its route. So we do have the advent of technology that's helped us have people deliver everything to us. I mean, you can literally get with a couple clicks of your computer or on your phone, anything delivered in this new world that we're living on. So the consumption is still there, and as the U.S. economy continues to sort of stabilize and work our way through this, there are signs and there are some underpinnings that once we see some more vaccines come online and more signs that it's going to be okay going forward, and it will be okay. So every day we're closer to a new vaccine or a therapeutic. Every day we're closer to having all this behind us, and every day we're closer to learning a little bit more both about the U.S. economy, about the consumer, but more importantly, corporate America's ability to adapt and adjust. And that's the condition of Americans and human nature. And finally, our gratitude, our hearts, thoughts, and prayers are with every veteran, past, present, and future. We have clients that even still today were, flying planes in World War II. So Blaine, we thank you. God bless you. Thanks for all your service and duty for us here and all that you've done to keep us healthy, safe, and protected, and protect our liberties as well as the Constitution of the United States. So for all of our clients out there that have done that, and everyone out there, from all of us at Blanke Schein Wealth Management, we are truly grateful, and this is your day for us to honor you. Take care. Have a great day. We'll see you tomorrow.